A very warm welcome to IDFC First Bank presents Leaders of Tomorrow Season 11. I'm Ritwika Gupta. This week we are bringing you our very exclusive Independence Day special episodes. On the show tonight, I'm in conversation with D Shivakumar, operating partner Advent International, to find out what contributes to the attractiveness of brand India. And in the second segment, I'll be chatting with Rahul Arora, CEO, Nirmal Bang Institutional Equities, about financial independence and much more. Thank you, Mr. Shivakumar, for joining us today.
Thank you very much, Ritwika. It's an absolute delight to be on the show with you today.
So to kickstart the conversation, tell me, in the contemporary business landscape marked by digitization and evolving consumer sentiment, how would you describe the current role of a CEO or founder or entrepreneur? Considering the significant changes that have transpired over the past couple of years, how have that reshaped the responsibilities of CEOs or founders in today's dynamic corporate environment?
I think a lot has changed for CEOs over the years, and equally some things have not changed. If you look at the things which have not changed in terms of responsibilities of a CEO, I think commitment to stakeholders was always a given. The definition of stakeholders has changed today. I think the CEO being responsible in some way for the culture of the organization, I think that still holds, even today. I think the CEO being responsible for governance and good behavior of the organization, I think that holds true even today. There's absolutely no doubt in my mind. If you look at what's changed, I think the size and scope of markets and the country has changed significantly. Today, every market is far more dynamic, far more competitive than ever before. What has changed? Tenure of CEOs has changed. In the past, CEOs would be there for 6 years, 10 years, etc. Today, the average tenure of a CEO in India is under 4 years or about 4 years. That has changed. That brings into equation many short-term decisions they tend to take compared to the longer-term right decisions that the organization needed to do. What has not changed, of course, is setting direction and being responsible for results in the organization. I don't think that has changed. What has certainly changed is employees in the organization. Employees are no longer loyal the way it was 10 or 20 years ago. Every employee out there is saying, look, I'm here for 2 years or 3 years. So the CEO really has to orchestrate a set of capabilities in the organization in order to win for the future. What has definitely changed is digitization and sustainability. Digitization in the sense that today, you have the shortest route to the consumer for any product or service. And customer experience is absolutely key today. In terms of sustainability, what is coming across very clearly is the license to operate. You need to earn the license to operate almost on a daily basis today. So the CEO role has got more challenging, more complex than ever before. But I can tell you, having been a CEO for many years, it's a lot of fun.
So given your background working with many MNCs, how do you think international companies today perceive India, both as an investment destination and a market for their products and services? And how do you believe this perception has evolved over the years?
Yeah, so if you look at India and independent India, we complete 75 years. I think India has always had a lot of soft power, thanks to Gandhi, thanks to music, thanks to movies, in some places thanks to cricket, in some places thanks to management thinkers like Ram Charan, Shrikant Datar, C.K. Prahlad, etc. So we always had soft power. I think it's in the last few years that we also got what I call hard power, which is economic power. Today, we are one of the largest markets in the world by GDP. So now today, the world looks at India in a very different light from the past. In the past, India was, okay, we need to participate in India. I think today most companies will say we need to win in India. India is a must-win country for us, especially if you're in the technology space, which is a real big shift over the last decade. No technology company can exist in the world without having a serious play in India. So I think India matters as a market, India matters as a voice, and India matters especially in digital play. So that's how I think things have changed.
So tell me, what factors do you believe will contribute to the attractiveness of brand India? And what do you think are some of the challenges with India as a market in the eyes of international businesses?
Yeah, so I would say India is a consumption market. If you look at our GDP, more than 60% of the contribution to GDP is consumption, which means it's a consumer market. So all consumer markets, you have a chance as long as you have a better product, you have better service, you have a better concept, you have a new business model. So that gives everybody a level playing field to actually go and talk to the consumer. That's very important. 25% of the next part of the GDP is contributed by capital expenditure, where the government is doing a lot, especially in the area of infrastructure, so that we have a very different kind of physical infrastructure in the future world. So for everybody outside of India, they see India as a huge opportunity. It's a big market. Okay, it has a lot of vitality to it. But added to the vitality is a bit of volatility. So they worry, they say, will this last? Will rules last? Will permissions last? Will local bodies change? Okay, will new rules come in, etc. So they always worry about the consistency of what we are able to give them on a day-by-day basis. Next, they see a lot of talent in India, but they worry about the talent. They look at the talent and say, talent is transient. Talent is not truly committed to the values of a company that it espouses, and hence they worry about how do I really get outstanding talent in India. So you cannot come to India for a low-wage arbitrage. You have to come to India in today's world for the digital technology that it can give you, for the high-quality talent that it can give you in digitization. I think those are the plus points. So India, in the eyes of people, will today be seen as large market, attractive market, a bit volatile, high-quality digital infrastructure, high-quality digital talent, and a market which we cannot afford to lose. That's the way I describe it.
So Mr. Shivakumar, tell me, what do you think is the definition of leadership today in New India? And what advice would you give to the leaders of tomorrow, especially fresh graduates from MBA schools, on the essential skills, mindset and approach that they should possess in order to succeed in the rapidly evolving business landscape?
So self-education is very important. Learning is very important. Second is, if you're a young boy or girl out there, go out there and collaborate and see what you can do as a team member. That's very important. The third one I would say is resilience. Not everything that you touch will be successful. Not everything that you touch will fail. But you need to learn from your failures. You need to be humble about your success and show the resilience for the long haul. And remember, a career is 30, 40 years out. So you need to have a horizon which is very, very different from the kind of mindset people have today to say, I'll do this for a year and then I'm off. So give your company 3 to 4 years time, let them get to know you, you get to know them, etc., and then move forward.
And how do you think entrepreneurs need to integrate their leadership approach with the diverse cultural and business practices that shape the new India landscape, ensuring effective communication with stakeholders, both at global and local levels?
Yeah, I think the first thing is entrepreneurs must always focus on solving something for society or solving something in an industry. I think you need to hone in on your product and consistently improve your product and solve the pain points of the consumer in that particular area. That's very important. Now, you need to stay the course. I think a minimum 5 to 7 years of staying with the basic core product is important for entrepreneurs. Entrepreneurs get very jittery. After 3-4 years, they want to expand their portfolio. Somebody who's doing chocolates also wants to do snacks. Somebody who's doing snacks also wants to do soft drinks. Somebody who's doing soft drinks also wants to do something else. They get bored with what they have and what they could actually make out of something that they have. The wider the portfolio you go, the less likely you'll succeed. So the greatest entrepreneurship battles are narrow, focused, very, very focused on solving a very critical problem or issue or whatever it is in that product category. That's where the best businesses are built.
Well, thank you so much, Mr. Shivakumar. It was lovely chatting with you.
Thank you very much, Ritwika. It was a pleasure doing this for you, and all the very best to you and your viewers.
Now, before slipping into a short commercial break, here's quickly telling you all about Brand Surge, a new initiative by Times Network. This is a unique opportunity for startups to be on TV without a TVC that can help you reach up to 25 crore viewers of Times Network through packages starting at only 1 lakh rupees. We at Times Network firmly believe in empowering startups with the right tools and resources they need to succeed. For more information, log on to brandsurge.co.in. On that note, we'll take a quick break here. Back in just a moment. Stay tuned. Welcome back. You're watching our Independence Day special on IDFC First Bank Presents Leaders of Tomorrow Season 11. In this segment, I'm chatting with Rahul Arora, CEO, Nirmal Bang Institutional Equities, about the importance of financial independence and how entrepreneurs can utilize equity investments for business expansion. Hi Rahul, welcome to the show. So let's first begin by talking about how the concept of financial independence has really evolved in India, since the country's independence in 1947. And what key factors do you think have driven this evolution?
I think the biggest thing that has changed from a financial independence perspective has been the role of women in the financial services sector. I think there was a time where most of the banks in India, public and private sector, were being headed by women. I think there was a time where Arundhati Bhattacharya was heading SBI. We had Kalpana Morparia heading JP Morgan. ICICI Bank was headed by a woman, and a lot of other mid-cap banks as well. So I think when you talk about financial independence, it's a great journey that India has overcome. I think today, looking at the number of women investors that we have in India, and the fact that they are financially independent and sort of looking out for themselves, is a remarkable story in itself. I still think the numbers are much on the lower side, and this has a very, very long way to go. So I think gone are those days. I mean, since you brought up independence, when the father used to run the house and he used to be the sole breadwinner, I think today multiple people in the family are contributing in terms of income, and I think leverage has gone down dramatically in Indian households because you have multiple sources of income.
So Rahul, how can equity investments help entrepreneurs raise capital to fuel their business growth and expansion?
Well, I think there are so many instruments in the equity markets that you can use to raise capital. Obviously, promoter dilution is the most easy one of them. You can look at rights issues. You can look at qualified institutional placements. You can even actually look at pledging your own shares to raise capital. It's basically a call that the entrepreneur has to take between raising debt and diluting equity. It's always a dilemma for entrepreneurs to do one or the other because the market sometimes does not take too kindly to debt. But I think periodic dilution seems to be okay as long as it's for growth capital. So I think, like I said, whether it's a QIP or a rights issue or just a promoter dilution, or you could actually go about, looking at other debt instruments also. But then, the issue again becomes of whether you want to go down that road of being leveraged. So I think on an aggregate basis, equity investments are preferred. Not continuous dilution, of course, but I think if you are an entrepreneur, I think the return on equity, sometimes the benefits of that far exceed when you actually raise capital via debt. So I think that's predominantly the reasons why you see a lot of promoters and a lot of first generation entrepreneurs that I've listed in the last couple of years as well, choosing equity markets as the way to go.
And what are some of the key considerations entrepreneurs should keep in mind while investing in markets?
There are so many, actually. I think, when you're talking about investing or raising capital, the first is, of course, how are the macros shaping up? Because to a very large extent, that determines the mood of the markets. And I think the world is so intertwined today that, even a movement in crude could impact the markets in a substantial way. And that could have a bearing on the entrepreneur's mindset in terms of raising capital. Just to give you an example, I mean, if crude today is at $70 a barrel and the Nifty is at 19,000, tomorrow, if it goes to $80 to the barrel and the Nifty drops down to 17,500, the mindset of the entrepreneur could change dramatically because the valuation that he or she will get for their firm will be a very, very different proposition. So I think the macros play a very important role. Interest rates at the point play a very important role. And I think the promoter holding itself in the entity. I think there are a lot of variables, interest rates, currency, commodities, they're all basically determined markets today. But I think the good part, at least as we speak today, is that global liquidity still seems to be okay. And that can actually help override a lot of problems for entrepreneurs when they're looking to raise capital.
Rahul, could you share some effective investment strategies and financial planning approaches that can empower individuals to achieve financial independence in India's current economic landscape?
So I think the simplest way to do this is for a services professional is when you get your salary in your bank account at the end of every month, you take out the essential expenses that you incur, which could be rent, EMIs on cars, or EMIs on houses, or your basic fruits, vegetables, petrol costs, whatever. So then you look at what your savings are at the end of every month. When you look at it in terms of savings instruments, if financial services is not your primary mode of income source, I think the best way to do it is to diversify into financial instruments like mutual funds and insurance companies. I think today's systematic investment plans in India are at all-time records. The kind of SIP inflows that we're seeing and the kind of mutual fund assets under management that the entire industry has. I think it's a very disciplined and a very principled way to go about it. When you cut a check out of every monthly salary and you allot, and it could be any number, right? Depending on your salary income, it could be as low as 5,000-10,000 rupees a month, or it could be a lakh of rupees a month or even more. But that brings in a certain amount of discipline. I definitely think having some insurance policy is extremely very important for the family. And I think beyond that, you don't have to restrict it to financial markets. I think there is always a case to be made for some amount of money to be put into fixed deposits. At any point in time, market volatility can actually hit you. At times like these, there is no point. It's not a bad idea to have a little bit of your investments there. You can put a little bit into gold. So I would always advise diversification of risk. But if you're doing it through the financial market route and you're not somebody who is a financial services professional, I think the best way to do it is through a financial planner and writing systematic checks for both investments in mutual funds as well as insurance.
In light of recent economic developments and shifts in the global financial landscape, what advice would you offer to young professionals in India who aspire to attain financial independence, while navigating challenges such as inflation, market volatility, and changing employment trends?
Well, it's a very short and sweet answer. Stay invested for the long term. I think if we go back to our previous generation, when our parents invested in the market, say in the 70s and 80s, the people, or maybe even early 90s, the people who made wealth are the people who stuck with their investments over a period of time. I think if you just look at the way the market caps of companies like TCS, Reliance, HDFC Bank, Asian Paints, Hindustan Lever, have all gone up, and there's so many others. It's a remarkable story of what compounding can do. So my biggest advice to people who are entering the market would be expand your time horizon. Volatility will come. Remember, the Lehman Brothers crash did happen about 13 years back. The markets had crashed, but look at where we are today. Demonetization happened, the markets crashed, but look at where we are today. COVID happened, the markets crashed, and look at where we are today. So I think the longer your time horizon, I think everything that happens in the market is short term. Corrections can last for a period of time, whether 3 months, 6 months, a year, but eventually markets do go up. And the longer you are invested, I think the more your wealth compounds and the safer your investments will be. I think that's probably the best advice I can give people. Don't get involved in short-term trading. I think that adds to a lot of stress and blood pressure. Just find good quality companies, park your capital, and ride it out.
So Rahul, the theme for our show this season is Ideas for New India. So what is your big idea for New India when it comes to investment that every entrepreneur should follow?
I think I can give an advice from the point of view of being an entrepreneur as well as from investments. I think from when you're looking at investments, the question is, money is not your only investment. As an entrepreneur, I think your biggest investment that you make is in people, is in your team. And I think if you invest wisely in them, your business will grow in a very, very material fashion. I was once with Mr. Narayan Murthy, and he told me in no uncertain terms, he said, Rahul, you make a company by making millionaires, not by making millions. If your employees are happy, your company will make money. So I think that's the best investment that an entrepreneur can make, is actually investing in your people. When you talk about monies, I think the important thing is not to risk your capital on anything where your principal will get eroded. I think as an entrepreneur, you have to take risks, but you have to balance out the risks to take a very educated call on what is going to make your company grow.
And my final question to you, when it comes to investing in finance, especially in equities, what advice would you like to give investors?
I would say always approach things responsibly because finance is a very tricky subject because you will go through ups and downs in your entire working career. There will be years where things will go really right at work and at the markets, but there will be years where things don't go right at your work or at the markets. Sometimes you may not get the appraisal you want, sometimes your investments may not get the returns you want, but the bigger picture is you stay the course if you believe in what you're doing. And like I said a little while earlier, I think if you have that discipline and patience and vision, I think every short-term volatility, whatever it is that is surrounding, eventually manifests itself into an opportunity. And the longer you stick with that, the better your chances of coming out on top are.
Well, it was great chatting with you, Rahul. Thank you so much. With that, it's a wrap on this episode of IDFC First Bank Presents Leaders of Tomorrow Season 11. Hope you enjoyed the conversations. Goodbye.